Okay, what's going on, everybody? We are back this time for a weekly / monthly / end to 2025 stream. Doing this one pre-recorded. I had some stuff I had to take care of this weekend, and I was not going to be able to make it for our normal 8:30 Sunday live. But I figured because this is pretty important that I would do one of these videos because if it's a random week during the month, it's not the end of the world. But there are a lot of implications here with how we close the year, not only on the indices, but of course across the board. And with that being said, I want to take a look at some names that do actually have those implications, and we can kind of use that as a bit of a basis for ideas to come in the upcoming month. Okay. So first and foremost, I want to do a quick check on economic data to see what we have coming up for next week. And, because this is the Friday before while I'm recording this, market closed a little while ago, but I got to click over a little bit so I can get the up to date. So Monday we do have data, red folder data at 10 a.m. The reason why I look towards red folder data is not because of what it is or what the number is going to be, because I could not care less. It is because I want to know what time that is occurring. I do not want to be in a trade and trying to front run data, right? To me, it's a bit of a gamble that I don't think that you necessarily need to take for any reason. Oftentimes, you will get a volatile candle off of earnings. It could be enough to stop you out, and there's nothing worse than getting stopped out and then price immediately going to where you wanted it to go. Trust me, I've been there, okay? Tuesday, we do not have any red folder data. Wednesday, we have non-farm employment change. Okay, so that is good. And we have ISM services, PMI. So we have manufacturing Monday, and Wednesday we have services. That's interesting. They're usually on the same day. Thursday, we have unemployment claims. And Friday, we have core PCE and University of Michigan consumer sentiment. So it's weird. We don't have non-farm payroll this Friday. That typically happens the first Friday of the month. I think we are a little backed up just based on all of the economic data being kind of paused while the government was shut down for so long. But that's no problem. Okay, so realistically, I mean, but just from looking at this broadly, it looks like Tuesday is pretty much the only day where I really don't have too much of any interest due to the fact that there are not red folder data that day. Now, I like to trade the days that there's red folder data. The reason I like to trade those days is because you will typically get an influx in volatility. And when that happens, price will move much smoother throughout the day. Okay. So now we'll take a look here at our monthly time frame. And with our monthly time frame, you will notice that we did close this month red, but realistically, there's no implications for that, to be honest with you. The reaction off of that monthly imbalance and the respect for that monthly imbalance is very encouraging for another price run back through those all-time highs, as you can see here by the circled bounce off of our monthly imbalance on NASDAQ. Come on over to your weekly and you will notice that it looks even more pretty. You have a run off of our previous all-time high breaker, low, high, lower low, break up and through, and we would anticipate the high of that sequence to act as a support level moving forward. We did not quite get down there. To me, this is more of a bear market / crash / monthly retracement, which because we got into that monthly bullish imbalance for the first time and bounced the way that we did, I don't really anticipate us coming down here, at least in December. Maybe early next year, who knows, but for right now, I think we look pretty clean. So from that run, from the low to our high, we got our discount retracement into a bullish imbalance, which is excellent. We gapped higher, like I said last week in the bulls are on the clock video. We got right down into discount. We got into the bullish imbalance. Closed up for the week, closing above this candle's low, which would protect this low. We gap up to start the week, and we absolutely rocket throughout to create a weekly bullish order block. You're not really getting too much more bullish than that. We also closed above a previous volume imbalance, which was bearish. That was a new week open gap from a couple weeks ago. So very, very encouraging thus far. I believe we have one little sliver of a volume imbalance to go up at 26.02 8 down to 26,004. That's just a volume imbalance or a new week open gap. Could it slow us down? Yes. Is that going to be a rejector? Highly unlikely, as we've already gotten our discount satisfaction. As we move down into the daily, it gets even more pretty. You will see that we swept liquidity here, immediately shown your gap higher, formed a sliver of a fair value gap, and we run towards discount of our bearish range. Following that, we ultimately end up shifting structure bullish on the daily time frame for the first time in a really, really long time. We haven't been bullish on the daily time frame since October 23rd. So very, very nice move. Halfway through erasing all of the damage that November has done or had done up to this point. And you will notice that right now we created an imbalance through previous buy-side liquidity, which is very encouraging. Look at how pristine and precise the close of this candle is inside of this daily bearish volume fair value gap. Excellent. Okay, so for me, because my higher time frame bias is bullish, I am anticipating a run through all-time highs. But when you just look at it from that lens, you have to also take into consideration, do I not anticipate any retracements, any pullbacks, anything like that? That's when you go down into the smaller time frames and try and get a little bit more precise. And ultimately, based on where we are right now, if we start to leave this station without any bit of a retracement, this is kind of a scenario where I'm going to be missing it, because I'm not going to be buying outside of imbalances. So for example, if we don't get a retracement down into this imbalance here, or maybe even this lower imbalance, it's really not an opportunity for me to go long, right? We are in range expansion based on our daily time frame. Now, of course, our weekly, our draw on liquidity is that all-time high. So again, I anticipated going there, but just because I anticipated going there doesn't mean that if I buy here with a retracement down to here, that's not going to stop me out. That's 200 points. We very well could get into this daily imbalance and from that point make that run through all-time highs. So it really depends based on how I want to operate with this overall thesis. Do I want to be trading short-term stuff? Do I want to take some time on things so that if I do get a retracement, maybe I can even add more to the current position, right? It's all different, and that's why I try to be as methodical as possible with this, because if you just make, blanket statements, which are fine for those who are looking from like a, investment long-term perspective, but when you look at it from like a shorter dated, smaller time frame, I don't even want to really say day trade, but more of like a short-term trade, then it can get a little dangerous, right? Because realistically, odds are you probably are going higher. You're probably going to ultimately take this high out, but is it going to fit inside the timeline of your contract that you're trading? That's really the big question you need to ask. And that to me, besides the whole, I call it like a 3-step plan here. First is to understand the concepts. Go through the videos, get an idea of it, and once you get an understanding of how they work, now you need to be able to back test it or prove it in hindsight, right? Because if you can't see the concepts at work in hindsight, you're never going to see it while anticipating it. It's just not going to work, right? You need to see it happen, so you're essentially proving it to yourself, so that when you are in a position for a setup, you can anticipate the move, because that's what we need to do. If you react, you're late, you get smoked. If you anticipate, you're setting yourself up for the lowest risk and the highest reward that you could potentially get based on where you're adding off of an imbalance, whether it's discounted, and so on. But if you're reacting, you're cooked. You got no shot, right? You might get lucky a few times on a little bit of a range expansion, but you're not going to nail the majority of what the run could have been. So, and that would be step 3. So when it comes to price reading, to me, it really is those 3 steps. And, I think if you're not methodical about your approach and you just kind of give it that like blanket, oh, we're going back to all-time highs again, which I think we are, but it's, after I don't know, what are we now? We're like 1,400 points off the lows. A retracement into a daily bullish level doesn't seem so outrageous, and that would actually be something that would be preferred by me as someone who, would be looking for bullish trade setups due to my overarching bullish bias, thinking that we go to the highs. Okay, so it's very overlooked. I don't think many people really talk about it from that lens, but to me, the higher time frame analysis is everything. That gives you the big picture, and I probably wouldn't be so gung-ho about this unless it's happened like 100 times historically, not just on NASDAQ, but thousands of times just through individual names, where you see we have the initial price run, you get your discount retracement into a bullish level, and then it takes off. But to do that from a smaller time frame perspective, you want to be a little bit more precise, and you want to be using that big picture idea with your smaller time frame setup. I think that's the reason why consistency is difficult for many, and it's just based on that. But the execution could be hard too. I understand that, especially when we don't have data. Maybe we have a shortened week. Like, those things can add to it, and that's why I think it's important to just kind of shed light on that. Where again, this is something I could say whatever. I urge you all to back test that. I urge you to prove that what I'm saying about non-data days and shortened weeks turn out to be a little slow, little choppy in terms of the delivery, and those are days that I tend to avoid trading for that reason alone. So anyways, that would be my NASDAQ analysis. Let's take a look at the others as well. We'll take a look here at the S&P, and the S&P as well. Very strong close to the month following getting into that monthly imbalance. Look how beautiful that is. Come on, baby. Unbelievable. Another bullish order block. Again, we turtle soup this low. Excellent price run. Beautiful, right? So ES is cooperating as well with NASDAQ. And now from the ES perspective, you actually had a better close than NASDAQ did on the weekly. You closed above that weekly imbalance, which is great. So as long as you don't gap down to open the week back inside this imbalance, I would anticipate us probably trying to chase this first. If you gap down, then it would make a lot of sense to go see that daily bullish imbalance first. There is a breaker incorporated in here as well. That's at 6791. But again, like I said, ultimately the open will be pretty important in my opinion. Now we head over to Dow, and Dow has some pretty ugly lows, but I think again for another time, more so like a monthly retracement slash bear market slash correction slash whatever you want to call it, right? But we are in the showtime bearish imbalance here on Dow. Which is great because you mitigated yet another bearish imbalance here on the daily time frame. Now, if we were to just flip this over, let me just paint some of these new bullish levels. Excellent. Okay, so if you look at Dow, you will notice that your range is a little bit different. Okay, and this is what you're working with from a weekly perspective, but from a daily perspective, you are working on something like this. That is the final level to beat. You beat that level, you are in very, very good shape moving forward to go chase yet another all-time high. Okay. Last but not least, we'll look at Russell, because Russell, believe it or not, Russell has been really strong, actually. Russell had a green close to the month as well, wicked into a monthly bullish imbalance, and look at how powerful that candle was to close out. Excellent, excellent, excellent. Come on over to the weekly. You will notice very similarly, we got into a weekly bullish breaker, low, high, lower low, break up and through, and we would anticipate the high of that sequence to act as a support level moving forward. You are heading towards the final bearish imbalance here on the weekly time frame, which would be our showtime imbalance in this case. Very shortly, a break through that, and obviously you're right at all-time highs, and hopefully looking to expand through that all-time high, which would be even better. We really haven't had smooth sailing in a while, just due to the fact that we're leaving behind so many lows, and for each time that we get a price run, it's almost immediately erased. So but I also want to take a look at oil, because I don't think oil looks all that great. You look at these relative equal lows down here, that looks pretty likely. Sweeping those lows to get into this imbalance, I think, would be the objective for December, honestly. I think that would probably be our best bet. Because if you were to sweep those lows, head into next year, potentially with the turtle soup opportunity, I think that would make sense, alongside a potential for a wider scale, index pullback. Because, again, we got into this imbalance already. We don't really have much left in terms of support until we get way lower. Now, again, this is just looking ahead. Nothing is implying that we go down after we make another all-time high, but it would also line up with a 1 standard deviation expansion through our previous all-time high. So that's pretty interesting to look at, actually, which is, at this point, 1,400 points away. But yeah, I would not be surprised if there was a little bit more of a wide scale retracement. Now, the only thing that really throws a pretty big wrench into that is the yearly candle, believe it or not, because on the yearly, in order for us to really continue this, bull run, if you will, right, on this on NASDAQ, you really want next year to not really ever come down to 23,114. If it does, it's going to prevent a yearly bullish imbalance from forming, which is it's really not ideal. Like, honestly, next year you would want it to be that bull year, create the imbalance, don't go down here at any point, and then maybe even the next year following you would come back and get into that bullish imbalance on the yearly time frame, and then move from there. That, I think, that would be your best bet for like long-term growth, right? Kind of like what we did in 2020 with that really big yearly imbalance right here that we formed. And when we did have that bear market, we retraced back into it before moving the way that we did. Um, so yeah, I mean, that's NASDAQ, that's all the indices, that's crude oil. I think I want to look at dollar as well. We'll look at some Bitcoin, and then we'll keep on moving it. So here is the dollar, okay? And I tweeted about this last week, and I'm so serious about this, but I really think this is like the end times for the dollar. I really don't think this setup is bullish by any means. You're running into currently a monthly monthly bearish breaker, high, low, higher high, break down and through, and we would anticipate the low of that sequence to act as a resistance level moving forward, right? Just the opposite of the bullish breaker. We're rejecting it thus far. We did end up creating a monthly imbalance. So here's where it gets a little tricky, because ultimately I believe that we will gravitate towards this 98.99. Maybe that's just through December. You get a nice run to close out the year. But from this point, this is a showtime level for dollar. If dollar bounces from that point, then I would actually anticipate it going into the 101.97 range. And if it were to do that, I would anticipate indices to kind of crap a little bit, even if that's a quarter or two to start off the next year. But this is a very important pivot on the dollar. Now, ultimately, if I was to, extrapolate and zoom this out, I ultimately think the dollar is likely to go below $88 at some point. If it were to do that, you clean up the relative equal lows, you get deeper into discount of that bullish price run. But from where we are right now, I think we are just way, way too high on the dollar. Now, I don't want to be the one to call a top, because there still is a path for this to bounce and move higher into your monthly imbalance. Because again, if you look at it from the quarterly, it's even a little bit more clear. You got a pretty big imbalance here, so we very well could make that run up to that next bearish imbalance. I just don't want to completely rule that out. But again, those equal lows really just are not safe, in my opinion. I think those are really, really, really ugly. So at some point, I would anticipate that happening. And, you hear that narrative painted all over the place in the news, and I think it's fair. I think it would make sense. And, the craziest or scariest part to all of this is that if this were to, kind of fit the mold of my model in itself, you will notice, what's going on, dude? Chill. What's wrong? But if you notice, like, if we were just to go from our high down to the low that took out our previous lows, we got really close to discount, and we didn't get discounted. Now with this, all that means is that our range was not set. Now following this, we did not quite get up into discount yet again. So it is just a little shady, and remember, that's a quarterly chart. This is really like from a wide lens or a far out scale, so I wouldn't necessarily be banking on this by any means. But in a perfect world, you're going to have dollar and the S&P kind of moving with inverse correlation, and that would be our best bet. So again, I do think dollar's going to come here. If that means that blast indices for December to the upside, so be it. I think that's great. I think a strong close to the year would make a lot of sense. And then we head into next year where dollars behavior at this pivot, I think, are crucial. So that would be the dollar. Let's head on over to Bitcoin. So Bitcoin's quarterly chart is actually pretty gross right now, I'm not going to lie, but it could be cleaned up, honestly, and it could be cleaned up pretty fast. And here's my thoughts based on this. If you look at Bitcoin right now from a monthly perspective, you will notice that we got deeply discounted inside of our monthly range. We still have the ability over the next 2 days and 2 hours to close back inside this monthly bullish imbalance. Now it is 5,000 points higher. We've seen crazier. Even if it doesn't close back inside there, it's technically not the end of the world. But as we proceed lower into smaller time frames, you will notice that the bounce on Bitcoin came at such a beautiful place. And this came inside of our discounted bullish imbalance, but also our bullish breaker here on the weekly time frame. We prevented the potential for a weekly bearish imbalance, which is also extremely encouraging. Now again, if we were to chase over the next couple of days here into that 95938, which ultimately I believe that we're going, but if we do it in the time span that I had mentioned for the monthly close, that would be even more bullish to me. So now really the key for Bitcoin from a weekly perspective is to either A, mitigate a bearish level, meaning go up and through this level, because that's the last level. You got nothing up here to really slow you down too much. But get through this level. If you were to get through that level, I think you're in really, really good shape. Or if you create a bullish imbalance. So next week you create the bullish imbalance, and again, to me that would be one of two ways that you could really base the idea from. Now here's where it gets a little tricky, because despite an awesome move thus far, Bitcoin did take a little time to ultimately create a bullish level. We mitigated a few on the daily time frame, but we did not create a bullish level until here. Okay. And this is why I really don't want to rule out the potential for a Bitcoin run this weekend, because if our daily can get inside this bullish imbalance and we get slingshot, we got some range here. Okay, you'll notice where price slowed down following the sweep of liquidity here. Okay, so once we took that buy side, took it by a couple cents, and we retraced, to me that means that this is got to happen inside that daily imbalance. And from that daily imbalance, my expectation is ultimately we see 94,000 to complete the odd man model, and then beyond that 96,736 would be our next daily bearish imbalance. Bitcoin is lagging a bit behind from a daily perspective on what we see on the S&P, because we have high down to our low. We did not discount there. We did here. Discount retracement into a bearish imbalance, flush down through lows. That is the completion of the Mando model. Bearish. Those happen too. High down to your low. Here's your discount retracement into a, oh no, we missed it. I'm sorry. Whoops. This is my point. Ready? Whoops. We did not get into discount of this range. By us not getting into discount of this range, the problem is we had a bearish breaker right here. High, low, higher, high. Breakdown and through. Retracement back into the bearish breaker. Flush. That's where our range needs to be started from, based on the move off of the breaker. Breakers here. There's your run. This is our current range, 50% here. We have 2 bearish levels to go. We have not shifted structure yet on a daily perspective on Bitcoin, as we did on NASDAQ, ES, YM, whatever, all the indices. Okay? Yo, can you stop, dude? Why do you keep doing that? Come on. What are you doing? I just took you out. Come on. All right, so that is Bitcoin. You good? Yeah? All right, good. Good job. All right, so now I want to take a look at some individual names. Again, there's gonna be some that have some yearly implications, and I want to take a look at those first, and then we will, these could go through quick. If there's nothing there, then realistically, we could skip through those fast, but then we'll break it down into smaller time frames as well. Okay, so Mara has its yearly. I'd like to close over that yearly fair value gap, and that yearly fair value gap is from at 1053, so close above 1053. I think you're in pretty good shape there. Tesla, nothing. This is in a this already completed the Mando model here, from your low up to your high. Here's your discount retracement into a bullish imbalance. There's your run through highs, and you might be saying, oh well, hindsight is amazing, isn't it? Well, yes, that was foresight. So hold on, let me pull this up real quick for you so you guys can take a look. This is like one of my favorite ones ever. So 6/19/2024, I said Tesla 414, and that was here June, your open price for June. All right, so we were midway through the month, so let's just say we're like somewhere in here. So about $190. I said Tesla was going to 414, and then I reiterated that here in October when price was at 250. So pretty good one, but again, yearly Mando model complete. So that is why I think there is relevance. There is important to be looking at things from a higher time frame perspective as well. Okay, AMD has also completed its Mando model, and it's currently in range expansion at this point. So our yearly range on AMD is literally just this year's candle. So it's kind of lame, but the previous one completed like this, and you know, if you follow me at all, you know this one was also tweeted about 50 million times this year. So Rocket Lab as well, another great one from last year. Dell, awesome. Dell, to me, it's kind of a no-brainer that this is going back towards all-time highs, and this is really a little bit of an opportunity. So Dell might be one. Let me just get rid of these. We'll restamp them as we go, but Dell definitely one that I would have some interest in moving forward as we got into a yearly imbalance, and we have yet to complete the model, which we will at 179.70. ARM is another one. ARM created a sliver, an absolute sliver of a yearly fair value gap here, unless something absolutely insane happens in the last month of the year, which I highly, highly doubt happens. But the model, we actually did technically complete this. We did it in like the pre-market session, and then we retraced quite a bit, but no problem. I still think this one's going to go higher as well, but PDD is a little bit of a tricky one. The reason why I say this is tricky is because despite sweeping yearly low and having a really nice move to close out the year, we did not get into this yearly volume imbalance. I'm not so sure if we need to get in there, but you know, honestly, would be pretty cool. Not much cooking there from a yearly perspective. Not there either. Lemonade looks fantastic. We'll get into that as we go into smaller time frame. Fastly as well. Fastly would shift. You know, on smaller time frames if we were to take out this yearly high. So BBAI also looks fine. And BBAI closed above the target that I think it needed to close at, which is pretty good. ENVX pretty good as well. Chipotle, this is one where I was talking like this has implications. So to me, a yearly close above, so if, as long as December can close this above 3509, I think Chipotle is in really good shape to start making some progress back up towards that all-time high. Failure to do so, and I would anticipate this getting tagged, sweeping that liquidity along the way. But the ability to prevent a close below this imbalance, I think, is huge for Chipotle moving into next year. Palantir is just so gone. Don't really care. Robinhood gone as well. LDI is one that I'm very interested in. We'll get to that one when we go down into smaller time frames. Zscaler, another one to me. This is also kind of fits into the Dell scenario. I think this one's a little bit more illiquid, but this one looks great too. Low, high, discount retracement into a bullish imbalance for your run through highs. This one kind of echoes the Datadog setup from earlier this year as well, which we completed the model here. Low, high, discount retracement, bullish imbalance, run through highs, and also the net setup from this year as well. Low, high, discount retracement, bullish imbalance, run through highs. Ready Player One. If you know, you know on that one. Yeah, I'm sure many of you have seen me tweet that or retweet that one 100 times. So this is what we got currently on Netflix. The numbers are all out of whack due to the fact that we have split. But from a yearly perspective, we did complete the model, and we are in price discovery. So here's your discounted bullish imbalance. There's your run through highs right off CE, or the midpoint of that imbalance. So Mando model completes, and now you're working on something like that. So no real implications. This one stinks unless UPS has, you know, an insane moment, because this is really funky. It took it in the overnight, didn't take it on the regular trading hours. It's not showing up here. So pretty bad lows. I mean, if we just took it out, even if it was by a cent, I would be much more optimistic about this one. But yeah, it's that one's a little bit more tricky because we swept it in one time frame when we didn't in the other. This name looks fantastic from a yearly perspective. I ultimately would love to see a close of the year over 133.72. To me, that would imply that we go to all-time highs sooner than we think. Coupang, really nobody talks about this one, but I think this one is pretty awesome as well. I ultimately think we are going to gravitate towards 50% of this range, which is at 38.99. The only thing is we didn't technically form an imbalance. We only mitigated one. So take it for what it is, but you know, could be worse. Oxy is inside of a monthly imbalance, which is pretty good, or I'm sorry, a yearly imbalance, which is pretty good. From this point, really, you kind of want energy names. But again, like I said, I think we sweep those lows on the energy names in December, and maybe that'll put us in for next month to start making progress higher. Okay, let's keep going. Let's just see, are there any more? Any more? This one's awesome too. Beautiful. I want this one to close above the yearly imbalance, which so far so good. At that point, I would anticipate a new run. Here is a yearly imbalance on NVIDIA. Okay, way far away. That would be amazing. This is also a quarterly imbalance. I mean, you know, whenever the market crashes, that's likely where it's going to end up. Boeing has some pretty bad lows, but it is holding on to a bullish imbalance, and our showtime level is here. This I'm not really all out on Boeing, to be honest. I think this one might be actually a play going into next year. We'll keep tabs on it. Net is kind of cooked through all-time highs. Shopify also completed the Mando model here from your low up to your high. You have a discount retracement into a bullish imbalance for a run through highs to complete. Here's your Amazon from your low up to your high. Here's your discount retracement into a bullish imbalance for a run through high. Mando model complete. Tempest, too little of data to really do anything there. Meta, low, high, discount retracement into a bullish imbalance. Run through highs, beautiful. Actually creating a yearly bullish imbalance as well, which is very encouraging for the Meta bulls. Google, from your low up to your high. Yeah, so Google actually has a pretty wicked range. This is way big. Okay. So no retracement, really. You know, you had one, but it wasn't, even at this time, I don't believe it was discounted, right? Nah, it wasn't. Nope. So that would be Google. Let's see, what else? Affirm. I think Affirm's going higher too, if I had to be honest. But we'll dive into that in a little bit. Disney really can't seem to get out of its own way. You know, if you look at it from like a quarterly or a monthly, you might be like, it's actually not too bad. But you know, I just really can't get out of its own way. Like the quarterly looks okay, the monthly looks okay, the yearly you have these terrible lows. You did take out this COVID low here, but you did leave behind more relative equal lows. You got into a yearly imbalance and you rejected it. So really, to me, like, is that implying that Disney needs to go see something like this, which is like really dramatic? But yeah, it's pretty crazy when you think about it, because you would never really envision Disney kind of being stuck in the mud the way that it is, but it definitely is. Let's see. Plug Power was hot for a little bit. I'm actually not really too interested in this one at all. Yeah, wow. Plug Power really got beat up by that retracement that we just saw, and we don't really have any imbalances left, so not too interested there. Oklo, way above. Yo, what is going on, dude? You're driving me nuts. What's going on? I'm talking to the computer. Sorry. But yeah, Baba got into the yearly fair value gap, slowed down a little bit, makes sense. Unity looks good to 50. Okay, a little bit of a choppy year out of Unity, but I think that's where it's going to end up going. To be honest, GameStop, not really interested at this time. Apple just so gone. I'm just scanning these yearly. We're gonna do a huge stream for the next, going into next year, with yearly setups and everything like that. But for right now, I'm just seeing if there's any that have implications for the last month. MSTR does. MSTR can create a yearly imbalance, which would be pretty good if things were to hold up through the end of the year. Datadog, I showed you that completion. Qualcomm also completed the yearly Mando model here as well. Second one all time, so that's pretty cool. But let's see. I think that might be it for these, but then we'll take a look at some smaller time frame setups as well. Let me check my phone real quick. Okay, so let's go back over here and we'll go to our shorter dated stuff as well. You know, obviously I'm not doing requests tonight just because I'm doing this in advance, but we will go through a bunch of names. So because we closed the monthly, let's talk about it. Mara, great monthly close to sweep liquidity and close back above. It's got to do something. Ideally, you do not form a monthly imbalance. That would be really, really bad. So hopefully we could turn on the jets to at least prevent that from happening here in December, which I do think will end up being a pretty bullish month. From a weekly perspective here, we prevented a new weekly bearish imbalance from forming. We do have one coming up, and then beyond that one coming up, which is in premium, I wouldn't really anticipate much of anything coming from that. But the next imbalance that we're dealing with is in discount, and that would be our showtime imbalance. You get above this, you got a chance. Again, so that is Mara. Heading over to Tesla. Tesla, the analysis that I posted last week on Tesla literally was perfect. We got right back into the weekly imbalance. We actually closed inside it. But a little bit of a retracement from here wouldn't make, wouldn't be the end of the world. It would make a little bit of sense, honestly. But that is the final level to beat, and beyond that, I believe you go see all-time highs again. I don't see why not. AMD, a little bit annoying, but it did create a weekly bearish imbalance. Now, I don't necessarily believe that this is the rejector, meaning we are going to absolutely dump after hitting that weekly imbalance, but that could slow price down quite a bit. And even if we were to retrace a little bit, going down deeper into discount, I'm not sold on that just yet, but potential for that to happen, absolutely. Rocket Lab, really nice weekly close after turtle souping and holding our discounted bullish imbalance. We, realistically, I want to see an order block form, so that would be a close above this candle's open at 45.15. In doing so, you do have a bearish imbalance well above at 56 doll hairs. Dell, again, like I said, Dell actually a pretty good yearly setup as well, but Dell from a weekly/monthly perspective also pretty good. You rejected your final showtime imbalance. You retraced down into discount of that most recent price run, swept liquidity in the opposing direction of your overarching trade, got into a weekly breaker and a weekly fair value gap. Look at the response thus far. Very good. Okay, so we are in pretty good shape when it comes to Dell as well. See, I made a rhyme. Look at that. So Dell looks pretty good. ARM, deep discount, bullish volume imbalance is pretty good. This is the spot it really needs to hold. And you have that turtle soup right there. I don't love the low, but you also did prevent a weekly imbalance from forming, which is excellent. So now you're working on this. That is a bearish level here. Okay, and I got to clean this up a little bit. It's been a while since I ended up charting this, but there and here as well from a weekly perspective. So ARM's got some work to do. A lot of the semis actually do, believe it or not. So PDD as well, very similar setup to ARM here. I like PDD, don't get me wrong. I really do. I think this is at some point going to go to its all-time highs. I don't know if this is the spot. You just created a pretty big weekly bearish imbalance. You got some pretty bad lows, and like I said before, you have that yearly imbalance. So I'm not totally, sold on this just yet. Now, Upstart from a weekly perspective, Upstart looks pretty good. You have a bearish imbalance in which we have the ability to BPR, balance that price range by forming another imbalance. So as long as next week's candle does not see 39.18 on Upstart, you are in very, very good shape. Got into our last chance bullish imbalance here on the weekly time frame and responded with thunder, 7% on Friday. A close back above 55.13, and ultimately that would be the creation of a weekly bullish breaker. And at that point, to me, all eyes on all-time highs. It's always crazy until it happens. So step by step, methodical, but that would be a good spot for Upstart at the very least. Okay, here's AI. AI has some work cut out for it as well. It must, absolutely 100% must mitigate this bearish level. If you do, you don't really have too much in the way from pushing you back up towards that swing high. Following that, if you can mount this level, you form a weekly bullish imbalance. You're also getting out of a quarterly bullish imbalance. That, to me, is when the ball starts to roll. But you have to beat this bearish level first. You do that, you're in good shape. Lemonade is absolutely cooking again, setting up for its third or fourth Mando model. I lost track in the last couple of months. I have a tweet on this one when it was like $30. It's awesome. And I'm still hanging on to some of the shares, but not nearly as much as I had at one time. Low up to your high. Here's your discount retracement into a bullish imbalance. There is your run through highs to complete the Mando model. Here's your next one from your low up to your high. Here's your discount. Here's your bullish imbalance. There's your run through highs. Last but not least, you have your low up, or I shouldn't even say that, low up to your high. Whoops, there's your high. And the reason I have it on this high and not this high is because we actually didn't hit 50% here. Shout out to Rico, you know. Here's the high, there's your discount, there's your bullish imbalance, and there's your run. Now we're working on one more time. Low up to your high, here's your discount retracement into a bullish imbalance, and ultimately you run through 83.77 would complete your weekly Mando model on Lemonade. Now the funky part, and the reason why this really was attractive to me in the first place, and the reason why I posted it, was because with Lemonade, you actually are kind of in, you know, LR situation, low resistance liquidity run. You don't have any higher time frame bearish levels to really beat following getting through this monthly imbalance. You know, you have one more. We've already filled it at this point, but it's in really, really good shape on this name. So Lemonade, good job. Keep up the good work, okay? Fastly. Fastly also a really nice close to the month. I really want to see Fastly create a monthly imbalance. So as long as you don't see 921, I think you're in good shape there. Ultimately, I have my first, or actually, I shouldn't say that. The swing completed from the swing folder, but I think this one's got more gas in the tank. I think, you know, you can go see 413 or even ultimately go see 1476, which is your next bearish monthly imbalance. Now, you know, if you look really far down the line, this has an absolutely massive range. At some point, I would anticipate this company getting it going and start to move higher, like much higher. But the time that it's going to take to do that, I don't know if it's necessarily worth the wait. You know, it could be years. You know, that's the problem. But BBAI, huge close on the monthly here to prevent or to respect this monthly bullish imbalance by doing that. Very, very encouraging on this name. The only thing is that it did technically form a monthly bearish order block. Again, not the end of the world because we are discounted, but still not like the most ideal. Creating a weekly bullish order block out of a discounted bullish imbalance, very, very encouraging. You don't have many bearish levels overhead. I don't know when the earnings already happened. So, you know, this one to me, it doesn't have bearish levels from a weekly up, which is very good. 939 would complete the Mando model from a weekly perspective and the monthly perspective at 1036. So I'm hoping that BBI can close out the year strong as well. I think a lot of the Russell names, or I shouldn't even say Russell, I should say mid cap, small cap names actually look pretty good for some expansion here. ENVX as well, final imbalance here as we head into December. Respect thus far. This one also, it's got some work to do. It's got to create an order block and it's got to create an imbalance or mitigate a bearish level. Can do both. Okay. Decent move thus far from Chipotle, following the sweep of that low to get us into that yearly imbalance. We have a huge earnings candle that we got to beat eventually. I think it will, but likely going to take a lot of time to do so. Remember, that's a yearly setup as well. Palantir, you know, whatever, Robinhood, whatever. LDI looks pretty good. Deep discount, bullish imbalance, bullish breaker as well. I really want to see this one start to grow some legs. Once you take out 380 on LDI, I would say 505 comes pretty quickly. That would be the creation of a weekly bullish breaker. And this is obviously also a monthly setup as well, as we had a monthly, monthly bullish imbalance and discount of the range right here. Okay, so really nice close to close above it, right? Zscaler, again, this is a yearly setup as well. Got into discount, close right on CE of your monthly bullish imbalance. Pretty encouraging. I think this one's got higher in the tank as well, but not really a good trade because it's pretty bad in terms of options with the liquidity on the contracts. Netflix, pretty good. Got into discount of your bullish range on your monthly. Manda model from Netflix would complete at 134.12. UPS, again, this one's a little funky, but did create a monthly imbalance, which is pretty good. Again, we took out those lows on extended hours. We didn't on regular trading hours. You know, a little bit tricky for that, but overall, creating a monthly imbalance, pretty good. Lennar looks pretty good. Got into the monthly imbalance as well. You know, this one from a short-term low-hanging fruit objective, I would want to see 144. That would be great. QPeng as well got into a monthly imbalance. Awesome. 50% of the range at 38.99. at some point I would anticipate price going there. Oxy, again, this one looks pretty good from the higher time frame, but I still think crude has one more low to go. So does that send us deeper into discount here? That is a possibility for it to do so. I don't really want to talk about this one. EVGO closed above previous sell side, which is good. Stayed inside that bullish imbalance. Awesome. Would want to see this order block next month. That would be the best case. Good case, not the best case, is to prevent the monthly imbalance from forming. That would need a run to 380 in order to do that, which I think that could happen. This one we talked about on the yearly looks pretty good as well. NVIDIA, it's okay. The video looks okay. I think this one would be crazy if we went deeper into this. Maybe even turtle soup these lows at like 163. If it were to do that, I think that would be pretty good, pretty fine moving forward. And that name, Boeing, actually pretty good response out of this week or monthly imbalance with that monthly breaker as well. I actually think Boeing's going to be a player this close out the year and even into Q1 of next year. Your upside potential 205 with that monthly imbalance. Let me just do a few more. Let's say Shopify just completed, no interest. Amazon also bounced out of that imbalance. Tempest bounced out. Tempest actually looks pretty good. Got into a monthly bullish imbalance and responded really nicely. This one's actually pretty good, so I would not rule that one out. But anyways, for anybody in the group, if you have any in addition to anything that we went over here, just feel free to just shoot me a message and I'll look at them at some point. Again, I just couldn't get on here live Sunday night, so that's why I'm doing this recorded. But anyways, I hope everybody has a good weekend. We're back at it to start off December next week. And we'll talk to everybody soon. So see you later.